Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just coming up on 5 PM on Thursday the 25th of March 2021 and we're going to spend the next few minutes looking at Gamestop. Alright then, let's do what we always do on this channel. We're going to start with our basic technical analysis first and that Elliott wave analysis second. Now if you're new to the channel, let's give you a quick rundown of the chart. We have all of our numbers and letters here. This is our Elliott wave. Elliott wave count. Let's just move it out of the way. We have 4 exponential moving averages on the chart: 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile showing all the various peaks of buy and sell volume, plus the highest peak being the point of control, which is our yellow dashed line here. We have a MACD set to as 10 for the short-term moving average in blue and a long-term moving average in orange, and a 9 to smooth. We have an RSI set to a 10 close with the green 30 level representing oversold conditions and the red 70 level representing overbought conditions. Right, what can we see so far? Well, we are on the weekly time frame and we are on log scale at the moment. Have to look at Gamestop in log really, because you can't really make heads or tails of it when you look at it in arithmetic scale. If I just give you an idea of what it looks like, I mean, it's just a flat line forever and then a bunch of massive vertical bar. We can't see any of the wave structure or give and take of the market in arithmetic, so we switch over to log where we can get a much better idea of the movement of the market. So far this week we've had a breakdown below the 10 exponential moving average with a pretty strong rejection at these levels of this price, and I have since bounced quite considerably back up. It's still only Thursday, we've got another day's trading yet, but if the market can turn around and close this candle with a long wick to the downside, perhaps a bullish hammer, maybe if we could get it green by the end of the week, we'd then have to see follow through in the following week's price action, but we'd like to at least see the close get above the previous week's close. At the moment we are below it. Okay, so that would be a bullish sign, but for the moment that's not a bad sign with this long wick to the downside. We did wick through the 10 exponential moving average, haven't made it to the 20 exponential moving averages yet, still above the 60, still above the 250. This correction since the recent rally, of which I think rallied as much as almost 800%, what do I make it as? 805 since the previous low. We've given back over half, I think. We've given back 66% of the market so far. So these are all huge moves, obviously absolutely gigantic, the volatility here in Gamestop, and it's so extreme that we can't even record a red bar on the histogram here on the weekly time frame. On the MACD it's just green, different shades of green. No crossover on the exponential moving averages either, no short over long crossover. The RSI showing a high and a lower high in the RSI, but we're seeing a high and a lower high in price, and no bearish divergence to speak of, simply what could be just cooling off for a while. It's possible this could be a free wave correction that we're going to see come down lower before heading back up. It's possible this could be a triangle, or it's possible that we're already up in an impulse wave. All of that we're going to discuss in the Elliott wave section. So roughly on the weekly time frame, no sign of a breakdown yet, but we have to remember there was no sign of a breakdown in traditional sell signals and indicators when the price fell 91%. So it's all relative, guys. It's been such a crazy market, we have to remember that. So let's come down to the daily time frame and see what we can see. Now, here on the daily time frame, we can see how we are trading below the 10 exponential moving average. Currently this is, of course, market still open. Currently trading at 167.09. We're below the 20 exponential moving average, which is the blue line, and we found very strong support at the 60-day. Very, very strong support. You can see if we just zoom in here. Here's the 60-day exponential moving average, the orange line here. It come down, sat the body of the previous day's candle, Wednesday's candle, right on it. We wicked through it ever so slightly and then have bounced quite considerably. I mean, I think we're looking at, once again, quite difficult to pick out these on the day time frame, but we have rallied as much as 50% today. in price. So a really bullish day, really bullish day, there's no doubt about that. 10 exponential moving average has not crossed below the 20 yet. The 20 is still a long way from the 60. No sign of a death cross occurring yet. There would have to be a pretty impressive breakdown in price, but we all know that of course can happen with the volatility in this stock. A push back above the 10 and the 20 on the daily for Friday's close tomorrow would be bullish, like I said. That would create that nice bullish reversal candle on the weekly time frame. With a long wick to the downside and a nice green top. If we see follow through tomorrow into Friday's session and Friday's close, that would leave me feeling quite positive that we've completed something here at the 60 with this 50% move down, or 60 odd percent move down. We've completed something here and are now heading higher, but all of that is yet to be seen. So on the MACD, what can we see here? Nice swing up and down here with a nice clean crossover into bullish, of a nice clean crossover back into bearish. We've just recorded a lighter red bar on the histogram here, suggesting that that bearish momentum is coming to an end, but we still need to see that blue short-term average cross over the orange longer-term average and start recording some bullish momentum here on the MACD as well. Now the RSI, even during the 90% move, subsequent 800% rally and 60 odd percent sell-off, we still haven't reached oversold conditions on the daily time frame, which, to be absolutely honest, I find truly amazing. You know, to have seen such swings in price and to have not have recorded traditional metrics of oversold, overbought, piece of cake for GameStop. Obviously, we're flying up thousands of percent or 50% in a day. We've seen thousands of percent over a few weeks. So yeah, not achieving that oversold condition, but we did get down as below the neutral zone, below that 40 to 60 zone at 33.65. So it'll be important to see how we close today. Do we close above the 20, above the 10? Do we stay a nice thick green candle, an engulfing candle, which gobbles up all of the previous bearish candle of the previous day and closes higher above the body and the wick of this candle? That would be very positive in the short term. And if we close out the Friday with above these levels, we'll have a positive bullish candle for the week. So that's enough basic technical analysis. Let's come down to our Elliott wave now, and this is where things get a little murkier, because obviously we can always apply Elliott wave theory, and I get frustrated with people who say that you can't, but I just remember to take a deep breath and remember that, you know, I didn't write it, it's not my... Yeah, I shouldn't take it personally, and I don't, but it's just frustrating because you can always apply it. It's just obviously the wilder and crazier and more volatile the price actions, we are opening up that margin of human error, as we have to interpret the count as best as we can, and we could be totally bloody wrong. Now, there will be a count, and there will be a right one, and it will be there, but it's not going to be particularly easy to find here in GameStop, I have to be honest, but I've done the best I can here. So right then, let's come down to the 2 hour, shall we, and see what we can see here. Full screen the chart. Right, so I'm still suggesting that there's two counts that I'm looking at here on the larger time frame. One is that we are, sorry, I've got that in the wrong place. That should be intermediate 2. Yes, primary 3. So there's two counts here essentially I'm looking at. One is that we've already bottomed in a wave 1 from here into a 3-wave move, A, B, C to here, and we've done a 3-wave move into a 2. Pretty wild. This is where I saw obvious signs of bottoming before. That's how we called this trade up, to cover that gap, which we've since done. That's one way of interpreting it, and now that we're up in a we've now started a new impulse wave of 1, 2, 3, 4, 5, and maybe have completed a 2 and are now heading higher in a 3. That's one way of looking at it. But we put in a primary 1 into a primary 2. We're now into a gigantic primary 3, which will take us much higher in price, much higher, and we've only just completed intermediate wave 2 of that primary 3. That's an exceptionally bullish way of looking at things. I won't deny it, but it is a believable count at the moment. The alternative is that this 3-wave move down to this low was just a single 3-wave structure in a 9-wave, I was about to say 9-wave swing. I'm not talking double or triple combos here, in a greater 3-wave structure. So what do I mean by that? I mean that the initial 3-wave move down was simply the A of an ABC. So let's just, why is that C off the charts? I've obviously moved it at some point. Let's just bring, of course we're in log scale, so we have to remember that. There you go. That's better. So the alternative is this, an ABC structure. Now this also fits at the moment because we have a 3-wave move down here with a 3-3-5 structure, which is what we'd expect to see in ABC on the smaller time frame. We also have arguably, instead of an impulse wave, we also have arguably a 3-wave structure here. Okay, and then we would expect to see a 5-wave move down, something like this. Now, if I'm being absolutely honest, I'm leaning more bullish at the moment than I am bearish. Now, I'm just leaning that way. That's not anywhere near saying I'm certain at all. I'm just leaning towards the bullish count for a minute. Now, the reason I'm leaning that way is I don't see a very clear impulse wave down from this potential supposed B wave. I do see what looks corrective to my eyes, not impulsive. Now, what I mean by that is the idea of this being a wave 1 is supported by this rather, more corrective structure we've got going into a wave 2, and then we can move up into a wave 3. Now, if I was calling a wave B up here, I'd want to see something much more like this, where we're just coming down in an impulse straight away. We're getting a nice clear 5 waves down and a 1, and then we're going to pull back in a 2, nice drive, 5 waves down and a 3 waves back in a 4, nice drive down and a 5, and I don't see that. I see it a bit of a mess, really. Something leaning much towards a 3-wave structure than a 5-wave structure down. So yeah, still leaning on the bullish side at the moment. On the 2-hour here, which is another chart I like to come down to do Elliott wave analysis after doing the basic analysis, was I like to check the 60, 20, 10 and 250 exponential moving averages on the 2-hour time frame as well. So what we see here is a couple of targets I put on the chart last time, which was the 61.8%. This represents the 61.8% retracement of this move up here. To come back to this line would be a 61.8% retracement of this move up. Now remember, we're in log scale, so it doesn't look like it visually, but it is. Okay. The next target I put up was a 50%. Sorry, this is arithmetic scale, I should say. Sorry, if we switched out, this would be 61.8. This here, the blue line, is the 50% fib retracement in log scale, which we're currently in. And as you can see, pretty strong confluence here. We've come straight back to 50%, so pulling back 50% of this move up, which is very typical for a wave 2. And we've come down and hit the 50 fib to the absolute tick. And just so happen to have found the 250 2-hourly support exponential moving average, which is the green line here. That's why we've had our bounce today, guys. We've been coming down to find a fib retracement and some solid basic support, and we found them both together in the same place, and that's been good enough for the algos to switch on and front run this thing and start going higher. Now we need to see follow through now. If we're going to we need to get back above these moving averages on this time frame, daily and the weekly. We need to get back moving again, and we need to see follow through. So we want to just see, really, in the shorter term, like I said, we want to see a positive candle for the week. We want to see the body of that candle close above the previous Friday's close above Thursday's close if we can, and a positive candle for the week would be nice. We want to get above this level at 347.67. This would confirm to me that we have put in a retracement into a 2 before heading higher into that 3. A breakdown below this 50% fib level at 116.59, which is also the 250-day support, a 250 2-hourly support exponential moving average on this time frame, coincides with the 60 exponential moving average on the daytime pretty much perfectly. If we just come back and have a look, here's the daytime frame. So 50% retracement on the log scale, right sat on the top of the 60 exponential moving average, which coincides with the 2-hourly 250 exponential moving average. This is obviously major support. We've either finished something down here or we've got further to fall. If we come back and take out this level 11659, we are going lower, and then I would probably flip towards the more bearish outcome, because we're really starting to push that retracement at that point. If I just explain what I mean, I'll show you. Let's just drag up a fib for a moment. Okay, so here we've still got the 61.8 down here on log. Fine, that's still a target. We've got the 78.6 down here on log as well. Once we start getting deeper than that, we're really pushing the depth of the wave 2. I mean, it can be 99.9% of the wave 1. We know that. But we want to look for better fib relationships than that. So here we are back on our arithmetic scale for a moment. Let's just zoom in and have a look. So as you can see, we're almost at the 78.6 on our arithmetic scale. We've gone through the 61, 65, 707, found support at the 250 exponential moving average, which you know is the 50% fib retracement on the log scale. I think there's a greater confluence with the logarithmic scale at the moment, and has been because of the sheer volatility and moves we've seen in this market. It makes more sense. So from here, we need to see if we've completed. Let's just have a quick run at how I've counted this. Let's just get rid of that. So let's come down to 15 minutes. So what I like and what I don't like. I do not like wave 1 and 2. Let's switch back into log. Even in log, I don't like it. I've got minor time frame 1, 2, 3, 4. I've had to accommodate a triangle here. So we've got A wave here, A, B, C, and then we've got a triangle. So what I'm saying is you've got A, B, C, D, E into the 4, 1, 2, 3, 4, 5. The size of this wave 4 next to the size of this wave 2 is kind of ridiculous. And this has me leaning, when I look at this piece of the price action, towards a 3-wave move, which I discussed earlier, which would support the bearish case. So we've gone A, B, C, rather than 1, 2, 3, 4, 5. But like I said, this portion of the price action has me supporting the bullish count, because it looks more corrective and impulsive. Alright, so let's carry on. We go into this triangle, into the 3, 4, 1, 2, 3, 4, 5 minute waves, into the minor 5. It's the wrong way around. Into the minor 5, into the intermediate 1. We then get this sudden sell-off. Now I covered this in the previous video, how when we came up and closed that gap in the gap cover trade I was talking about, we had this initial sell-off, then we pushed higher to a major retracement point, and then just woof, sold off in a hurry. This I think was the minor A wave, and then minor wave A into an A, B for the triangle on minute time frame, B wave triangle, into a C of a minor B. Now from here it gets a bit messy, and we have to really stretch the chart to try and get our wave count to work from here. So we get a diagonal in a minute 1, ABC minute 2, 1, 2, 3, 4, 5 impulse wave down into the minute 3, ABC into minute 4, and then another diagonal into the wave 1, 2, and then 5 waves, 1, 2, 3, 4, 5 into minuet 3, 4, and then another 1, 2. In here somewhere would have to be a 3, 4. Maybe we could find it in 5 minutes, but I'm having to just assume it's there, because we'd be getting down below minuet to sub-minuet level at that point. Great. Not clean, not tidy, absolute fucking travesty and a mess, but you got to put something on it, and there is something there. It's just, have we got it right? Have we counted it right? So swingy, so volatile, just very tricky to do. The basic analysis, I honestly believe at the start of the video, is probably offering you more value than the Elliott wave analysis at the moment, purely because we can simply point at those daily and weekly candles and those major support levels of the Fibonacci retracement and the major moving averages. I think are probably offering more value than dicking about with the numbers and letters here. Now I love Elliott wave, as you know, but I also know when it's of greater value and when it isn't, and at the moment I'm struggling with it. So off of the low, 1, 2, 3, 4, maybe we just topped out in a fifth on what am I saying? Time frame am I talking about here? We're saying intermediate 2. Let's give it a benefit of a doubt and say that we're coming up here in minute to put in a minor 1 and say that's fair enough. So we're either going A, B, C into a 4 with a fifth to come to take us above this moving average here, or we've just topped in a very short fifth. I'm going to give it a benefit of the doubt and say this is there's a fifth wave coming up here for a minor 1. So let's just say minor 1, 2, 3, 4, 5 to come. Obviously not to scale, guys. I'm just slapping them on the chart so I've got them there for the future reference. So enough time over the next day or two to get this 1-2 complete and get above these levels. Maybe if we have a very active day tomorrow and Friday. Other than that, that's all I've really got for you guys at the moment. The only other thing I wanted to just bring up as an alternative to all of this, even now that I've laid it out, is a pitchfork. Right, so based off of our initial wave 1-2 pivot, we still have, as I suggested in my previous video, the geometry of the market is still intact. Now, one of the things which compelled me to call the bottom here was the indicators I was having in the MACD, the loss of bearish momentum, the percentage move from the high, the retracement of the move up, and the fact that we stayed inside this pitchfork and found the outer bound. And this is what was all of these things together, including a count, were encouraging me to take that trade up, which we did. Now, since then, we've gone from the extreme outer bound of the pitchfork to the inner outer bound of the pitchfork, back to the inner outer bound, back to the median line, and slightly through. So, are we still inside the geometry of this initial move? If we are, then we have to consider the count slightly differently. But like I said, this is all just very difficult to get a handle on at the moment in terms from an Elliott wave point of view, but we have to consider our options while they develop. So if this was a 1-2 and we've gone 3-4-5 into a 1 here, what if this isn't a 1 but this whole pattern is a 3-4? So an alternate count would be something like this, that we're still inside the initial move. 1, 2, 3, 4, and then a fifth and final wave up into primary or cycle degree 1. Once again, can't be certain. So on that basis, this whole structure here, I'll tell you what we'll just do so we can tidy up because things are getting really messy here. We'll just make a copy, a Gamestop copy, and we'll open a copy of the chart and I'll give you a much more basic idea of what I'm talking about. So let's just delete the fucking lot, pardon my language, and let's just slap that back on. And let's close down these indicators for the moment. So let's just have a look at this pitchfork idea that we're the simplest way to express this alternative count is to do it inside of the geometry of this pitchfork. So that's what we're going to do. So let's just grab it here and we're going to magnetize, and we're going to magnetize. And then out here somewhere was the low. Here it is. So magnetize to here. Okay, and then just lock this tight. Zoom out a bit. So, as you can see, things are a lot clearer now on this chart. We're going to save this and keep it just so we can express some simpler ideas which aren't so cluttered with our Elliott wave count and the fib retracements. We just want to focus on the absolute basic geometry of the market here, and this will help me make my mind up essentially as time develops. So, simply put it, this could be a 1, this is our 2, so a wave 1, swing high, swing low to get our pitchfork place for our 1-2 pivot. We then come straight up to a 3 and we're now doing maybe a triangle for a 4 and then we're off again. So it all you could easily end up with a structure where we are just consolidating this gigantic move, because it's been absolutely freaking massive, hasn't it? If we're being honest, it's just huge. And on that basis, we could be doing something like this. We've got the bottom of our pitchfork here, and bloody thing. And then you could be going A, free wave move into the A, which would be now to count. Potential free wave move into the B. Free wave move into the C, free wave move into the D, free wave move into the E, and then we get out and get running. This would be my alternate count if I wanted to be bullish. I know I've already got a bullish count. This is a secondary bullish count, but like I'm saying, I'm just trying to share some ideas at the moment because things are still very crazy, and we could only have just started something. You know, that's a really interesting thing. We could have only just started something instead of already being over and the short squeeze being over and everybody saying, oh, we're just going to work our way down, which is a possibility of that A, B, C, and we go all the way back down into 15, 20 bucks, whatever it is. You know, that's still a possibility. But while the geometry of the market holds here, while this pattern holds, and if we continue, if we come down and see a higher low, maybe we're done, maybe we're not done. If we come down and see a higher low, then see a lower high and then a higher low, we could be doing that triangle. If we come back and take out the high, like I've already said, we can be more bullish in the short term. Now, I've waffled enough as it is and probably bored you to tears, so we're going to call it there. I hope you found this video of some use. I wish I could offer more in terms of clarity, but it's GameStop, so let's be serious. Alright then guys, if you've enjoyed this video and you're new to the channel, please subscribe, smash the like, let us know what you think in the comment section below. If you want to, feel free to share any of these videos, and remember to hit that bell notification icon to remain informed of future video releases. Alright guys, take care, and I should be back with you tomorrow for one more video for the week. All the best, bye bye.